Yep, you're live.
Good morning, everybody. This is Danny Riley from Mr. Top Step, aka pitbulltraders.com, coming online soon. And we've got Rich Miller in here from HandelStats.com. Rich, good morning, and how you doing?
Good morning. Doing great, Danny. Looking forward to a good day of trading, and I'm happy to be here.
Great. Now, I know that we had a little snafu with the link that we sent out this morning. I guess nothing goes smoothly every time. But anyways, we saw a little bit of a sell-off yesterday. The Nasdaq had its worst day almost a month, and I went back and I looked, and I think the Nasdaq had been up 14 out of the last 19 or 18. And two of those or three of those days were only down. They were down less than 0.20%. So we did see a little bit of a sell-off yesterday, but I'm kind of thinking maybe, after the markets have rallied so much, people have kind of been getting a little complacent and kind of forgetting about some of the seasonal statistics going into the end of the quarter and the rebalance. I'll let you take over, right?
Well, I want to go over what I do in my morning review real quick, but just as a side note, this is one of the strongest Septembers I can ever remember. I don't know if there's been a stronger one. Relentless about going up every day, and these are just numbers I keep on the NQ and the ES, and I kind of updated them yesterday. They might need a little update today, but right now we're up around 13, almost 14% in the ES and over 17% in the NQ. I'm looking for a lot higher this year. I didn't, as I say, I didn't. And look at this, we're 39% off that April low, almost
40%. Yeah.
Yeah, and here's the Nasdaq. It's almost 50% off that April low. I mean, that's just unbelievable. So and
that kind of skews things a little bit, right?
Oh my God, it's just incredible. But anyway, let me jump in here and really quickly go over what I do in the morning here.
I'm going to jump off. I'm going to let you take over.
Okay, thank you. Because I have members in my room, and we go over this every morning. I look at the charts. This is the S&P chart. These are my daily standard deviation levels that I put on the chart every day, and those come out in the sheets, so everybody has them. And I've back tested all my standard deviation levels, and they definitely meet the empirical model, which means that 68.5% of the time we don't exceed one standard deviation up or one standard deviation down, and 95.5% of the time we stay within this two standard deviation range. And just above that, right now it just happens that the weekly standard deviation level is just the one standard deviation for the week is just above this two standard deviation for today. And then I color code all my charts. I have what I call my 1440 fractal timing price system. And it's something that I look at time fractals as being just as important as price. And that's why all these are color coded, and it means certain, things to get to these levels. These were the levels that I said yesterday we would have to get back above to reverse this. So it's no surprise that they stopped and stayed right here overnight. And then I have these gold levels that my system generates, and they're they're gold. That's why they're colored gold. And right now it's saying if we can start trading above this 67, 25, 75, and that other number was 26. So it's kind of right there. They match up. If we can start trading above there, we're going to move higher. And if we can get above this 65.51 quarter, we will for sure trade a lot higher today. We've got plenty of support down in here. The way this market has been trading, I just don't think we're going to give that much up right now, even though it seemed like a lot yesterday to be down 30 points. It just wasn't. It was unusual, and in that we've been going up all month. This is the Nasdaq. I keep a weekly chart in the NASDAQ. These levels here I've had since early last year, 2024. And I actually had these targets over a year ago. And you can see that I put this out here, a while back when we hit this target to almost, this was about 6 weeks ago, almost to the tick. And when we hit that, I set a weekly close above here, targets this up here, and we're going to get a monthly close up here. We are going up here to 26,815. They could pull back a little bit in here, but that's where we're headed, more than likely. And I think we'll get there, probably pretty soon. So looking at the rest of the NASDAQ, this was, and remember the NASDAQ I call it a wild beast. It doesn't chart as well as the S&Ps. It always exceeds or doesn't quite make the levels. It's just a little more unruly, but this was the level I said yesterday we had to get back above this 24,890.75, and this was a level, a different level. These are my 1440 levels, and there's a little bit more to know about them. But right now, these gaps, and I will show you the gap stats. They're 88% probability of filling, and what that in the NASDAQ, and what that means, it'll go down to my settlement price. And I use special settlement prices. My settlement price from yesterday is 24,836. The cash close in the ES was 24,831.5. So I'm just a little bit higher than that. But I am right now saying, and I'll show you these stats in a minute, what they look like in the room. It's an 88% probability that will go down and fill this gap, and it's only 44 points. That's a real small gap for the NQ, and the ES right now is an 86% probability of filling the gap. And we'll look at those. Here, I can bring these down here right now, real quick. So this is, and I run a couple pages in the room that people can look at my stats and see this. This is live, so it updates with every tick. And then I have these enhanced gap stats, and I will run those in a couple minutes, and we'll see what the enhanced gap stats are. And there's a lot more meaning to what they do. And these can predict, the high and low for the day, whether you'll, make it back to the previous day's high or low. And there's a lot to them, but right now these basic gap stats are so high we'll probably fill these gaps. It's an $8.75 gap in the ES right now, and my price there is 87.16.5. So we should dip down there and fill that more than likely. So let me put this back up here. And as I say, I run those in the room every morning. So we have those. And then I'll show you the algorithms that I generate 3 trade probabilities in the first hour. And I can show you briefly. I just bring this down here. These are hooked up, but the prices don't start filling in here until 9:30. And then at 9:35, if there's it will trigger a buy or a sell, and it'll tell, whether you should be long or short. And then at 9:55, because I use these time fractals, at that exact time, it'll tell you whether it's buy and sell. And then after the first hour at 10:30, and there's other trades that to be made in using the stuff I use, but those are live in the room. And I'll show you once the market starts, what they look like. As I say, they aren't updating now because they don't track anything until 9:30. Now to continue on, the other thing that I look at, and I've been using Ichimoku for a long time, and here's Ichimoku Intel. I was looking at that yesterday to see what I thought here, but let's go here to the NQ and go to this 1440. And I have some extra stuff on Ichimoku. I put some extra indicators on here, and I really love this for long-term planning. Right now, this market is absolutely screaming higher, and I'm looking at it as though if we can continue this up move in here and don't have a pullback for like a substantial pullback for the next couple of weeks, which I think is kind of possible. Come the end of October, this market could absolutely, if we keep going up in here, come the end of October, going into the end of the year, this market is just going to scream higher. And I have December under every scenario as a positive month. So that's what I'm looking at here in the NASDAQ. And right now, as I say, it's completely positive, nothing to hold it back here. And the ES is the same way with the same scenario. The way I read this chart, it's telling me that especially if we can keep moving higher here, that by the end of October, especially if we don't have any pullbacks in here for like another couple of weeks and get a little higher, it's gonna put a lot of pressure on it to scream higher by the end of the month. So that's that. The bonds and the notes, I usually take a look at those and see what's going on. CB. I'm when it comes to the bonds and the notes, I don't really. I think we're going to be trapped in a range for a really long time. I mean, rates could go down a little bit, they could go up a little bit. I don't think they're going to move substantially for a long time. I mean, can we go up here? Can we go down here? Yeah, I mean, they'll have a trading range, but I really think they're going to be range bound for a long time, and I have reasons for thinking that. You can see this is the 1440 bonds, and when the market moves sideways in Ichimoku, it's kind of choppy. It just chops back and forth. There's no clear trend. So, and that's what I'm seeing here, and I think that's going to continue on for quite a little while. Let's go back here. It's 9:21, so we have 9 minutes. And this is about the time I start to look at the enhanced gap stats and answer any questions that anybody has. Let's see. Just checking here to see what's going on there. I brought a couple of other things with me today too. I have these. This is the quarterly statistics, and my quarterly statistics actually go back. Here I have them. I have them back to 1970. I have all first quarter, second quarter, third quarter, all these stats. I haven't updated the 2025 statistics in this particular study, but when we look here. We are in the third quarter, and let's go here a little bit further. And you can see that the third quarter, we've had some big third quarters in the past. 10%, 14%. What year was that? That was 2009 and 10. So I mean, and so those would have been 10 was after coming out of the financial crisis. 9 was probably a bounce back from the financial crisis. I mean, and then we've had some obviously really ugly third quarters. Down 17%, 2002, and there's 2001 after the .com bubble. And let's see, we can go back here to 87. And they actually, even though we had that market crash in there, that was October. That quarter was actually not too bad, but you can see, and this quarter, as I said, right now we are. Where's this? Current quarter, we're up 7.76%. So when you look at that compared to all these, here's the up quarters, 34 up quarters, 21 down quarters. When it comes to quarterly stats, I have another study that I break down all the quarterly stats to see which is the best and which quarter has given us the most points and all that stuff. But every quarter has there's more positive quarters than negative quarters in every one of them. When we look at and we'll look at this real quickly, and then we'll jump back into the gap stats. When it comes to monthly statistics, let's go here. Let's go here and clear this out. This is what's so unusual about this September. Let's go here, and this is all the September data back to 1970. September is the only month where there's been more down months, 30, than up months, 24, and a net September up to this year has lost 923 points. So that means if you would have stayed out of September every year since 1970, you'd be up 923 points more. Of course, that's going to change a lot because we're up a couple hundred points now. So that's going to go down, which is definitely one of the better Septembers. If you look here, there's one 8%. That was 2010. Of course, that was coming out of the financial crisis. So lots of room to move to the upside. But this is actually going to be this is going to end up being the second best, and it may overtake this if we go up another percent. This could be the best September ever. It's got the potential to do that. Since 1970, the best September was 8.76%. Right now, we're up. What did I say just a second ago? 7 point something. We're up 7.76. 1 more percent. This could be the best September ever. Wow. I knew it was up there, but and I'll be looking at that later on. And then what I will do is see what happens in the following months after the best September, and so I'll have a study on that, and we'll for the members of the room. Let's look at the gap stats here real quick. 86% probability in the ES. It's only up 8 points. No sense in running the enhanced gap stats because these gaps should fill. 88% probability in the NQ that they fill. So I'm going to go here real quick and right here. And those are both partial gaps up because we dropped a lot yesterday. So those are all partial gaps up, and that's 0.17 and 0.15, 0.17, 0.15. So we go here. So partial gap up right here. I'll just do this real quick. And 0.17 right here. And I'm always improving my studies and working on things. So right now it's showing in the enhanced gap stats 82% probability that the NQ fills the gap, and the ES is right here. Go here, ES, and that's a 0.16. 0.16. Okay, and then go here. Come on. Okay, ES is 80% probability in the enhanced gap stats. So we can look at these real quick, and we're about to open 2 minutes to the open. These gaps should fill. 10 points there, 45 points here. They should fill. And if you look right here, the Nasdaq should fill in the first 5 minutes. It's got a really good chance of filling in the first 5 minutes. And the ES, it may take a little longer. It could be the first 25 minutes. So and of course there are other things that will change, but right now the ES is looking like it's going to open above that gold level. That's always very bullish to open above that overnight gold level and above the this BGL here. So I use caution at selling that like right off the bat. We have to see what happens here. We're about to go, and then after we get going, I'll show you the algos, and we'll talk a little bit more about some other things. And we'll do this until 8:45, and hopefully enjoy what I'm doing. I do that market review every morning and have these gap stats, and then we'll have these early trades. But let's see, we got going here. 10 seconds till the open. It looks like it's going to be pretty strong. Hey, hold on, let me get this other thing real quick. Go here, get this. And we're off. We are off. Skip here. Jeez, right.
So these gaps, I mean, if they're a high percentage, right?
A very high percentage that these fill.
They also can fill in a couple minutes, right? I mean,
well, the Nasdaq should fill within the first 5 minutes, according to that study. More than likely, fill in the first 5 minutes. The ES is a little more problematic. Let me see. I gotta go here. Get this other stuff.
I mean, to tell you the truth, and I don't know how many people are in here, I can't see totals, but the gap trades are I believe the best trades of the day. If you're right on the gap trade in the morning, you set off your day with the winner. And a lot of times when they do open higher, they very seldom they like just go ripping out of the gate, but they do sometimes, right? I mean,
oh, yeah, they definitely can. This is actually, I mean, if this moves this way, well,
one of the things I've noticed, Rich, and you probably noticed it too, and not necessarily on this gap, but let's say that the S&P is opening 16 higher, right? And you sell the gap, and it goes down. It goes down 4, 5, 6, 8 points, and then it goes flying back up. And what I call the double pump. and then that's when you sell it into that double pump, because I'm telling you 80% of the time that those end up to be the reversal out of those things. So either way, even if what I'm saying is, even if you do get a little pop, you're more than likely still going to go back down, I think.
Well, the other thing that I look at are these, as I say, these gold levels. If they trade above the higher gold level, and I have the thing that makes me if I have other levels above, like I have this 1440 that's right above here, this is going to be a big level to get through, even if they trade above here. And trading below here in what I would consider a normal gold level range, it's and the settlement is just below this other gold level. That's 1825, and this is so it's like $1.75 below there. Once they start trading down here, they should go back down there. Plus, the other thing is right here, and these are levels from yesterday too. That after we broke down, I according to my 1440 system, you gotta trade above these and close above them, and during the RTH on an hourly basis. And you can see that they couldn't get through there all night. I mean, they kind of did, but it's nothing substantial. It's not like they walked away from it. Those levels are really pretty strong. And I show everybody how to draw those levels. I mean, you'll learn how to draw those levels.
I mean, there's such demand for gold out there, though, right? I mean, it's just, there's no let up.
Well, these gold levels on my chart, that's why they're golden. NASDAQ just filled the gap.
Yeah.
So we'll see what happens here. NASDAQ.
But, hey, Rich, real quick, you started talking to me.
Hold on.
Right.
You know what? I wanted to get one other thing here real quick. What time is it? It's not 9:34. I'm going to show you. Here's my algo trade right now. Let's see. And this is in the ES. Let me go here. So right now, this is indicating a sell if at 9:35. See, now it's not. If at 9:35, it's trading below this 6721.06, which means it'd have to be 6721 and a quarter or lower. It would be a sell. And the NASDAQ is right here. The NASDAQ's the same way, but this is pulling back from that. So it's not going to be unlikely to be a sell. And there's several things that this looks at to tell whether it's going to be a sell or not, or a buy. And there's the end of that first 5 minutes. So no trade triggered there. Now you're waiting for this open range trade to trigger. So, and my open range is the first 25 minutes. So at 9:55, we'll get another indication of a trade if there's one to be had. But this 5 minute did not trigger a trade. And I will show you, put this back up here. And the ES still has not filled the gap. ES has still not filled the gap. Here, put this down. So, the NASDAQ did, the ES didn't. And I have a program on here that's writing my open range. And once it is established, we'll shade that in, and I'll show you what this is all about, that open range. Let me go here and get this. Right here. Let's just pull this over here so you see what I'm looking at. So these are my daily sheets. With the stock indices, I follow a lot of ETFs too. And here was volatility stuff there. Here's the QQQ. And so some of these ETFs and ETNs, I follow them TNA. And these are all the open, high, low, close change, the implied volatilities that they were trading at. And then what one standard deviation is in those. So you have these levels here to look at for support and resistance. And I teach what all that is. And then this is the intraday ranges for the ES, the NQ, the RTY, and the YM. And I show you how to use this. And I look at these are average true ranges, which is just another way of measuring volatility. And you can look at this, and there's things you can discern from how it trades through these periods. I have some stats and stuff on that, and it's just a way of looking at the market here. Then I have the standard deviation table for the SPX, ES, NQ, NDX, all these. And here's prior day settlement price: 1 SD up, 2 SD up, 3 SD up, and then half 1 and 1.5%, 2% levels. So, and this is what one standard deviation is 46.62 points, and that's with a 13.26% implied volatility. And my levels are really good. Yesterday, the ES took out my one standard deviation level by like 2 points after moving like 44 points or whatever it was. Only took it out by 2, and of course it didn't close below it. NASDAQ didn't quite get there yesterday, but let's see what I got going here. I have to. That's this, and all these sheets, and then I do. I also have weekly standard deviation tables. So if you're following these things like here, I put the weekly standard deviation levels on my chart, but then I go down, and so you can look here and say that by Friday, what's a 1 standard deviation move in the ES? So where you look at the daily, and the daily is, let's go down here and look at this. The daily 1SD is 67.6312. 67.6312. That's daily 1 standard deviation. But between now and Friday, that is 67.9724. And these are more important for people that are, playing options. So you know what the probability is of getting to these. And as I say, when I start the week out, this is 1 standard deviation for a 5-day period, and then I go 4, 3, 2, 1. So you can follow through and see what's going on there. And then with all these ETFs and everything, let's scroll down here a little further. I put out these basically the pivot sheets, so you can look at the ES and you can see the cash close, where the S&P was, the cash close, the close that I used, and then I have some pivot points, the 0.5%, yesterday's open, yesterday's high, the 1 standard deviation, and then what today's 1 standard deviation is, and then same way on the downside. So you have just a map to look at things, and then I do this for RTY, YM, and then this is a sheet that I use every day. I've been using, I just like to look at what the open, high, low, close was prior day, change, fair value, and then some pivot points, and then just a condensed, 1 and 2 standard deviation, implied volatility.
Yeah,
the size of this.
I love that.
And then you can look at the, here's last Friday's close. So you can see, obviously, and we made a new high yesterday. I keep track of the 52-week high, 2024 high, last week, and the same way on the downside, just so you can kind of look and see where you are in relation to everything. Very good. And then I do range analysis, how often it's hit 1 standard deviation, whether it did the prior day, prior 5, 10, 30, current year, 2 standard deviations, 3 standard deviations. I have more stuff on range analysis that's updated, so you can look and see what the largest couple of ranges of the year have been, and these are updated all the time. So it's just, a lot of information to keep, but it can answer a lot of questions. Let me go here to back here to StreamYard and see.
Rich, you were calling me over the weekend. Give me 1 minute.
Yep.
And you called me about three or four times, and
Yeah.
I didn't pick up. I was off. I just couldn't pick up. Tell everybody what you told me, what you're working on, with having like every indicators or.
What I'm doing is I'm actually building these indicators. Like I put them on my charts. This is by the way, the open range doesn't get established till 9:55. But these indicators right here, this is where the market opened. It draws it on the chart automatically, so you don't have to do it. And like my 1 standard deviation levels automatically draw on the chart every day. And now I have these weekly standard deviation levels, although I have to relabel them. And they draw on the chart. So here's the 3 standard deviation up. I just made these weekly ones to put on the chart, but I didn't label them. I'm going to go back in and do that this weekend. Well, probably not this weekend because my daughter's getting married, so I'm very busy this weekend.
Yeah.
Anyway,
congratulations.
Yeah, thank you. This is the 2 standard deviation weekly level. So 95.5% of the time, you never make it to this weekly level. And as I say, I back tested my levels. They fit the empirical model, which means that those statistics hold true. And although there are fat tails in just about every market, and S&P is no exception. Here's the 3 standard deviation weekly level. And if you go back and look at some of that other stuff that I just showed you, you can see how often it's hit there in the last 52 weeks this year. And so you have those stats, so you know. and I do a lot of that. Now, the other thing that I do, by the way, everybody knows that I have been an Intel fan for a long time.
Oh no, yeah.
And I just got to say it. I'm pleased as punch because it's above 30, and I think I think Intel could literally double its price between now and the next 4 months.
Well, do you got it? You got an Intel chart?
I do.
All right. Well,
We'll look at, and the other stocks that I've really been hot on are Joby, which is actually down a little bit today. Joby and Archer Aviation, because that's new aviation technology. It's going to be owned by the U.S. These are great aircraft. It's really an exciting thing. It's going to change the aviation industry. I'm a pilot, so I just love that kind of stuff, and I'm so bullish on those two companies. I think everybody should own a little bit of it and just forget about it, because it's going to be growth for a long time for a lot of reasons. I can't even go into it all. Anyway, let's take a look at the Intel. Actually, I think I have a better chart to look at right here. I'm going to close these HandelStats statistics down. So,
and then the other thing, we're going beyond our time too.
Okay. We'll look at that real quick, and let's go here.
While you're looking for that, let me talk for a minute. Rich doesn't have a link to put out. He built one last night. He's been redoing his website. The link didn't work.
No, I didn't hook it up. I'm going to hook it up in a little bit. I'll get it done.
But what he'll do is, if you're interested in Rich's service, go to @HandelStats on Twitter, and it's HandelStats. Look, I'm just going to say what he's doing has gotten better and better and better. I mean, if you asked me this 2 years ago, I would have said that it was a work in progress. About a year ago, I discussed it with him. I told him things were improving and improving. And around that time, I believe he switched his database. And since then, he's brought in AI, which I encouraged him. I've got an intern that's very smart in coding that, showed you some stuff, right? And I think that Rich is on the cusp of something not good. I think it's great. And I don't put my name behind anything like that. David Dubé, I'll put my name on that. Great. We've got a couple other guys coming in, Tom and Lindsay, and we want to bring in a couple other people. But I really believe that there is a place for everyone. And when I turned my back, I did it for two reasons. One, I know if Rich is right, I've never heard anybody say that this could be the biggest up September ever. Right? I mean, I've never heard that. So that's really an interesting thing. But the other thing is, when you got to those sheets and you started talking, you said, and this would be really good for people that trade options to use. So it's not just about futures. It's not just about, it's about options. And it's really, and I believe from my heart of heart, and I think you know this too, Rich, the trading floor created a lot of trading flow, right? Mm-hmm. And when you're trading and you're involved in stuff like that, you want this kind of information. You do. You need this kind of information. And really, all these levels that he's created, that top sheet that he has, I look at that every day. I can't go through all the stuff that he does, but I also know what the crypto is unbelievable too, right?
Oh, the crypto is doing well. Everything does pretty well, Danny. I was just going to add, I was an options trader on the floor for like many years, and that's where I was introduced. The options pricing model uses implied volatility to price options, and therefore you're pricing the underlying, which is the market, and that's how I develop these standard deviation levels, and they work. They're dynamic too, because all the big options groups and these huge companies, they use them, and there's a reason why the market reacts at those levels, and I could get into that. If you follow me, you'll learn why they're important to know. And I truly believe you cannot be an effective trader without knowing what these standard deviation levels are, because that's the option pricing model. We have trillions of dollars of options out there pricing, and especially with these weekly options. I do another thing called the VDB. It's my volume data bar graph, and I run that every afternoon for expiring weekly options, and it's spot on quite often.
Well, I mean, if you go back and you look at the subquad wedge, right? The markets were building into all this. I mean, they never let up, and you know, I know that there's a guy that I don't think you follow him, but it's TikTok on Twitter, at TikTok, and he's really, really great. And he started saying that he thought he's very, very good. I mean, probably one of the top guys on Twitter for levels and stuff, for futures, other than you. But anyways, he thinks that, you know, we put in a top yesterday, and that we could start to really come down.
Nope.
I don't think so either.
I will admit that earlier this year I was surprised with the April meltdown of how extensive it was and how quick it was. But and I'm not going to kid you that I was down money in that, but I hung on because I was so bullish about what had happened and transpired. I look at so many things that I was very confident that the market was going to come back, not only come back, but make higher highs. And I'm still convinced that the market is going to be up substantially from here between now and the end of the year.
Yeah.
You can see right here, this is my open range. It's still got a few minutes, and you can see that this is expanding here. And we'll have an indication of another, once my open range is established, that's what you can look at on these sheets. Let me go down here. This strikes and play is an option kind of thing that you have to learn to use. But let me go here, and I guess it's up right here. Once this open range is established, we can see yesterday's open range was really small. And they've been averaging $14-15 for the open range in the ES, and this is around $80 for, I'd say, for the NQ. And once that is established, if it's not a lot larger than than what you see here, they have a tendency to follow through on the breakout to the other side, to whatever the first hour range is. And you can see that the first hour range here is a little 20-ish, maybe a little better than 20. So you're talking 13 to 20. When they break out, they're going to go 5, 6, 7 points, extend whichever direction that is. And then, of course, you can, do a follow through it the same way, looking at the daily ranges. And of course, it depends on where the standard deviation levels are and what's going on. But this is looking, well, right now, the NASDAQ would be a sell and the SPOO would be a sell if we close down here. But if we rally back, it's going to be all over. And I'm thinking, the only thing I'm thinking with the market backing off a little bit here and having filled those gaps, I still think we'll probably may find some support here. But the one thing that I'm going to point out is Intel is up. It's acting really well.
That's Rich's favorite. Anyway, but look, there is some selling. We're seeing a little bit of selling going into the end of the quarter, after the expiration. That's really how it's worked. But is it enough selling to really push the market down a lot? I don't think so. But again, the last trading day of the quarter, that'll be a day when you see a lot of big increased volume and trade. So who knows? Maybe there's a little bit to rebalance to the sell side. And you got PCE on Friday. So, when the market's up this much, you're getting a little bit of selling. I don't think it's substantial in any way. But anyways, listen, Rich, why don't give me 1 minute. I wanted to ask Marlon to put up a deal that we're going to be putting up for Mr. Top Step. It's the last quarter deal that we've got. And again, we don't really push real hard. You know what I mean? It's not really. I think I will say one thing though, and I was thinking about this a little while ago. Rich really has got something here, and it would take a long time to really break down what he's got. And when I first met him, and he opened up a bunch of files on his computer, and it would take a long time to really break down what he's got. And when I first met him, and he opened up a bunch of files on I don't know how that's computer, and it would take a long time. I don't know how what's going on there, but anyways, and when I first met him, and he opened up I don't know what that is. I don't know what's going on there, but anyways, hold on.
It's coming from you, Danny. You've got a window open that's playing the stream.
I'm looking.
Luckily, you trade better than you tech.
Well, I didn't do anything. I didn't touch anything to turn it off.
Yeah, I don't know why it started all of a sudden.
All right. So
it's
anyway,
good now.
I'll finish off talking about Rich, and then anyways, I want to finish this real quick, and I'm going to finish it real quick. I think Rich has really gotten to a point now that he should do independent webinars, and I think that in groups of 20 and 30 people, it would be much better if you wanted to learn more about the product. So what we'll do is in the next week or two, after we do another one of these or a couple more of these, we will put something together where maybe at night after the markets are closed. I don't know, maybe during the day. It depends on what people want. But I really think that that's really something that people could dig into. And then to finalize, we've got a really good deal going into the end of the year. And we've never done anything like this. And basically you get all of Mr. Topstack's products, our chat, the MEM, Spygate, which is really cool. You get Live Squawk if you don't like the TV and you just want to hear the news. And I love those guys; they're great. You get the opening print, which alone is $50 a month, and I really believe it's a good bundle. And I want to push people to take this. We'll have it up on Twitter. We'll put the link out there. And I want to thank everybody for coming in today. And sorry about the technical problem. I really don't know where that came from. But anyways, good to see you. We'll see you soon. Have a good trading day.